Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor 1914, and I'm here today to help you guys. I'm here to help you guys to develop wealth. At my channel, we talk about how to make passive income, how to make money, and how to let your money make money on the top of itself, and basically how to just get that generational wealth. Today's video, we're going to take a step back because it was a post that I saw on my Facebook page at the beginning of the year, and someone was asking, "Hey, do anybody that know how to invest?" So last year, when I was getting my channel up to date, my YouTube channel up to date, I was really focused on creating videos on how to start a dividend growth portfolio, the difference between dividend growth and growth investing and whatnot. Uh, and so I started from the ground zero and how to buy stocks and all that jazz. And then as the year progressed, I went away from like investing 101, investing basics as a beginner to more intermediate investor. But I realized it's 2024, new year. You know how people do the New Year resolutions, New Year, new me type ish. So we're going to talk about what the blueprint, the secret to create generational wealth. If you are not familiar with how to invest, or if you don't know how to invest, we're going to talk about that today. Hey, we're gonna dive right into it. We're not going to hold no punches. We're not going to pull no punches. We're going to dive in. So in many of my videos, I go really deep in regards to this stock and that stock and dividend growth investing, compound interest, yada yada yada, charts, graphs, statistics. In this video, I'm gonna keep it simple because a lot of individuals. Uh, this is if you're making $30,000, $50,000 per year, $75,000 per year, $200,000 per year, $150,000 per year. This video is for anyone. What I find is that there's two groups of people. There's the one group type of individuals like myself that's really excited about individual stocks and like to stock pick and yada yada yada. Great. Like to put in the time to see the growth of said stock picks. And then there's other individuals that just want to just keep it simple. They just want an ETF or an index fund, and they just want to just purchase it, and there you go. The secret to wealth building is just high conviction. Whether it's the market go up, go down, you pick something that you truly believe into it, and you keep buying it, and as it grows, you make money off of it. Simple as that. What you see right here is the famous stocks, the stocks with the highest market cap. So you have Microsoft at $3 trillion market cap. Then it goes down with Apple, Nvidia, Google, Amazon. Meta is Facebook, Berkshire Hathaway, Eli Lilly, Tesla, Broadcom, Visa, JP Morgan Chase, United Healthcare. The reason why I wanted to show this screen first, just to familiarize yourself with stocks. Stocks are businesses, and so Microsoft is a business we familiar with Windows 360. We're familiar with Apple products, Nvidia, gaming. We're familiar with Google because shout out to the parent company, YouTube, Amazon. And so you can go down the route like as I do, to pick individual stocks, bet on yourself, and if it's a stock company that's a winner, you ultimately going to be a winner, right? But for individuals who are newcomers like yourself, you want to learn how to what's the secret to generating wealth. It is here's the thing. Just lay it out. It's VOO, the S&P 500, and QQQ. So what you do is that's how you lay it out. How you lay it out is that first step one, you will take the money that you have coming out of your account, of your work account, and you pick and choose for it to go into an SP 500 fund at work for your 401k, and you make sure you are investing to the match. So if your company match up to 3%, 4%, you are matching up to that 3 to 4%. Then you're going to stay at that job, or rather you level up. So if you stay at the job between the next 15, 20 years, keep it at that. If you want to continue to contribute to your 401k, keep only contribute to the max. Then you're going to open up a Roth IRA, and you're going to contribute up to the max of the Roth IRA, which is now roughly $7,000, I believe. And then you're going to create a taxable account. And in your taxable account, you're going to do this. You're going to pick either VOO or VTI, and you're going to pick QQQ. So in the example that I go to in the next screen, before we talk about the strategy, what is VOO? So VOO right now costs $454.63. If you have the whole $454, you can buy the one share. If you have $200, $100, you can buy partial shares of said ETF. In the past, you had to have the whole $400, $500, whatever the stock or ETF costs to purchase it. But due to competition, now you can pay partial shares. So if you wanted to put $25 and buy $25 worth of VOO per day or per month or $1,000 per month, $200 per month, $50 per month, you can do that. Shout out to competition. But in VOO, which is the S&P 500, the top 500 companies in the United States, it's, remember the prior screen showed you the different stocks that we as stock, dividend, and growth investors buy individually. But the top 10 holdings is Microsoft, NVIDIA, Meta, Google, Tesla, Apple, Amazon, Google, Berkshire Hathaway, and this is interesting. I see Broadcom. The last 2 to 3 years, this last company has changed. I would say in the past it was Visa, and then I would say the last 2 years I saw it was United Healthcare, and this is really my first time really seeing Broadcom actually in this space. So this is the S&P 500. The top 500 companies in the United States are in this particular ETF. That's Home Depot, Lowe's, United Healthcare, Eli Lilly, JP Morgan Chase, Bank of America, Chevron, ExxonMobil, et cetera, et cetera. So you're betting on the United States economy. The next company or the next ETF is QQQQ, which is the NASDAQ index. And as you see right here, QQQQ also costs $422, which you can buy $100 worth of QQQ. You can buy the whole share of this ETF. And what's in QQQ is the exact same thing, but what you'll see is that the holdings percentages is a whole lot different. In VOO has 7.25% in Microsoft and 6.61% in Apple, and then 3.73% in NVIDIA. In QQQ, it's a lot more. And so, since it has a lot more higher percentages in tech, on bad days when it goes down, this fund is going to go down a lot. But when it's a bull run and when the market is going up, your money in this fund is going to go up a lot because the beta is over 1. 1 is the standard. So over 1 is going to move. If the market moves, it's going to move 1.5 or sometimes twice. And that's what you see right here. In QQQ, you have Microsoft, Apple. But what was different in QQQ is that you see Broadcom. Broadcom was number 10. Right here, Broadcom is like number 7. And you have Costco. Costco is a grower. I love Costco. Now, how the secret to creating the generational wealth is you are investing into your 401k up to the match that your company is doing. If your company says it matches up to 10%, great. You have a great company. If it's up to 5%, you have a good company. If companies have any type of match, cool. And then now you're going to be investing in VOO and QQQ. In this example, I put that you're going to start out with a $500 investment. You can get $500 from your grandmother for Christmas, a bonus. You can get $500 from doing Uber, Grubhub. You can get $500 easy. Just get it. Come up with $500, and you're gonna split the $500, $250 into VOO, $250 into QQQ. Boom. Now you have an investment of $500 split into two both ETFs. Then what you're going to do is that you're going to contribute $450 per month into your investments. So $450. So split into two. You're going to do 225 into VOO. Two. So you can see 225 into VOO, 225 into QQQ. Simple. And so whether it's you do it on a monthly basis or whether you do it on a bi-weekly basis. I don't care how you do it. You just do it. Just do it. You say you guys want the blueprint, the secret to creating wealth. There you go. S&P 500, NASDAQ. And investing consistently, whether you want to do it or not, whether it's you feel like the market is too high, or rather you feel like the market is bottom is dropping because of bad news, because of the Jim Cramer or whoever, whoever newscaster or whoever says that, you need to sell. You don't sell. You continue to buy. Continue to buy. And you continue to buy. And so 30 years. I'm 35. So if I continue to do this, then this goes out to 60, 65. That's right now the typical retirement age, around 65, 67. As the baby boomers, as they clear out to the market, as me as a millennial, as I creep into my retirement age, I'm pretty sure they're going to increase my retirement age from 67 and a half to probably 70. Who knows? But again, you're going to choose VOO. You're going to choose QQQ. You're going to invest $500 per month, $225. Oh, no. You're going to invest $450 per month. If you can do 500, an extra 50, great. You're going to do $225 into VOO, VOO, $225 into QQQ, which is the NASDAQ. And I you're going to receive a roughly 18% rate of interest rate. Now, it can be more, it can be less. Over the last several years, the interest rate for VOO has been around 12%. The interest rate rate of return for QQQ has been roughly 24, 25%. And so I split the hairs and I did the average and I met in the middle of 18. So with these numbers, it could be more, it could be less, whatever. Starting out, boom, 500. If you can consistently do it, if you consistently do the plan, as I say, 225 into VOO, 225 into QQQ, after 15 years, you will hit $335,000 in your investment account. This is your personal investment account. This does not include the money you're going to make from investing to your work 401k. You have money in your work 401k, and then at 65, potentially you have money for Social Security, and then also you have this portfolio as well. If you consistently do it 20 years, so for me, 35 plus 20, 55. If I was to do this, I would at the end I would have $805,000, $487, right? That's if you do $450 per month. I'm investing $1,000, $1,100 into the market. So I'm trying to make the money and have it compound quicker, because for me, I want to retire early. So I know that if I want to retire early, I got to put a lot of money in the front end so I can get that compounding. For me, I want to retire at 50 so I can move to probably Brazil or the Philippines. But my goal is different from your goal. So if you have a spouse, then you sit down with your spouse and you plan your goal. If you're an individual single woman or a single man, then you plan accordingly. If you are a high compensated employee where you're making 150, 200,000, 250,000, 500,000, I don't know how much you guys are making, then you sit down, you plan your goals, but it doesn't change. If you're making more money, or if you're bringing in more money, then you can change the budget from $450 to 1,000 or 800. And then guess what? You'll see you actually hitting these goals a lot quicker, and then you be able to sit down and plan out what you need to do. But this is right here the blueprint for individuals who say they don't know how to invest. They don't know what to invest in. Here is a simple blueprint, the secret to creating wealth that everybody in the investing community know. Yes, I'm going down the path of stocks. I invest to Microsoft and Apple and Broadcom, the single stocks. It's a lot more risky. I also invest to crypto, Ethereum, and Bitcoin. So depend on your investing philosophy and how aggressive you want to go, then it's up to you. But this is help. This is for individuals who don't know how to invest, who don't know what to invest in, want a strategy and something that they can automate and they can do month in and month out. There you go. So shout out to my boy Terrence Slaughter out in Milwaukee, Wisconsin. He was wondering like, hey, is there any type of blueprint or anything for someone to have just to help individuals how to invest, what to invest in? There you go. You have VOO, VOO, the S&P 500 ETF. I also went over the stocks that's in VOO. There you go. So you guys can look and see. And then you have the NASDAQ, which has pretty much, though it doesn't have any financials in the NASDAQ. It's predominantly majority of tech companies. So that's why you do the mixture of half in VOO, half in QQQ. And then you pick the budget of $500 per month or $250 per month if you're starting out early entry level in your career, or if you experience your career, $1,000 per month. And then boom, as you continue to see that, I just showed you guys right here. That's how you make the money grow. And that's the secret to wealth. That's the secret to generating wealth. Picking the fun, high conviction, consistency. Boom. Whether you want to or not, consistent. And my portfolio is growing. Last year, my portfolio was around 45,000. Staying consistent, it was going up and down. Right now, it's around 53,000. I'm investing $1,000 per month. I'm trying to get that bad boy to at least 100,000 so that the compound interest to really kick in. So I hope you guys enjoyed this video. All love. Make sure you like and subscribe. Write any good, positive, or bad comments down. I appreciate the criticism and the feedback. All love, and hope you guys have a great day. Bye.